Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, can solar energy provide a nice tan for your portfolio, or will you just end up sunburning your bottom line? In this episode, I wanted to talk about a new rising theme that's affecting investors, and that's the conversion from fossil fuels to alternative fuels like solar energy. In a previous episode, I did talk about clean energy and how you could invest in clean energy using the ETF iClean or ICLN. However, in this episode, I wanted to go a little bit more in depth on a specific kind of clean energy, solar power. Many professionals and scientists believe that the sun provides the most energy of any source that we have access to, and it's just a matter of being able to harness it. Accordingly, an ever-growing industry is rising up around that concept, which includes heavy hitters like Tesla. However, when it comes to investing in a new space like this, sometimes picking an individual stock isn't the best way to go, since sometimes the best in breed can end up collapsing in a horrible way and leave you without any exposure to the space. When it comes to new sectors like this, I prefer to use exchange-traded funds, also known as ETFs, because that's a basket of stocks that offers exposure to the entire space without the single company risk that comes from having just one stock in the space. In the case of solar energy, my preferred ETF is the Invesco Solar ETF with the ticker symbol TAN. Yes, it stands for TAN. It's a great pun. In this video, we're going to take a deeper look at TAN. We'll look over its fundamentals. I'll show you a buying plan of what I would do if I didn't hold shares in the stock, and then I'll go over my own position, where it's come from, and where I plan to go in the future. Just like with any ETF, the best place to start is at the source. When you go to Invesco's website, you can click the portfolio tab for a more detailed look on what makes up the ETF. As we scroll down, you can see that Invesco breaks it out by sector, they break it out by country, and even the market cap. But what I like to look at specifically are the top holdings. And you can see that the number one holding in this ETF is Solar Edge Technologies, which makes up 11.08% of the entire fund. You can also see that there are plenty of other popular stocks from the solar sector here, including First Solar, Enphase Energy, Sunrun, and more. And that's one of the great things about an ETF. You don't have to worry about which ones of those are the best in breed, because you'll own a little bit of all of them by buying the ETF itself. When you take a look at the solar ETF on Yahoo Finance, you can see that it does provide a yield, but since it's only 0.1% annually, it's really not much to worry about, and it's not something that would affect your decision to invest in this sector or not, since it isn't significant enough to make a difference to your annual gains. Next, let's take a look at TAN on a chart, and I'll develop a buying plan of what I would do if I didn't already hold a position in the stock. We'll start by drawing a Fibonacci retracement from the pandemic low to TAN's high in 2021 to develop levels. You can see that the Fibonacci retracement seems to be relatively accurate when it comes to this ETF, as there is a lot of price action around the different points of the Fibonacci retracement. And currently, TAN is approaching the 61.8% retracement down here at $61.19 a share. Looking over the past, you can see that it's regularly tested that retracement, so I'd probably use the close of this day here as my starting point at $61.73, where I'd make my first buy of 50% of the overall allocation I want in the ETF. The reason I would use this allocation is because you could see from its high in 2021 to its low in 2022, the TAN ETF has already dropped almost 54%, dropping 53.92% from its high to the low. After making my first buy at $61.73, I'd look through TAN's history to see if there was other levels of support, and you could see that this day down here seems to have a pretty good level of support here at $52.89, but I'd probably raise that up to the open of the day here at $53.27 to ensure I'd get a second hit. After that, you can go down to the 78.6% retracement at $43.57, but when you look in the past, you can see that there's a lot of support above that point, so I'd probably use this day here at $44.72 as my next buy. After that, you can see that we enter into a bit of an air gap here where there is no Fibonacci retracement, so we could either draw another one from the bottom of the pandemic to a different high, which would give us additional levels, or we could just use past levels of support. Either one of these techniques works. It's completely arbitrary what levels you pick. The key thing is to wait until a stock sells off a bit before you add to your position. Using our new Fibonacci retracement, you can see that there is support down here at the $38.52 line, and I'd probably use the open of this stay as my next buy here at $38.22. After that, while there is support down here at the $35 mark and the $32.51 mark, you could see that in the past the 61.8% retracement has been an interesting level of support. However, it often finds support above it, so I'd probably use the low of this day here at $30.20 as my next buy. After that, you do see that there's a pandemic bottom here at $21.14. However, when I look in the past, there's quite a bit of support up here, and I probably use this as my last buy at $23.88. The reason for this is because of the amount of transition that's happened from the fossil fuels into alternative fuels just in the last 2 years since the pandemic started. I'm skeptical that we'd ever see the ETF sell off that low. Investors and the global community have latched on to the idea of alternative fuels in such a way that I don't think we'd see that kind of weakness in this sector again. At this point, you could see that we have our initial buy and 5 additional buys. So the way that I do this is to buy 50% initially and then 10% at each of the additional 5 buys on the way down. From here, let's take a look at my own investment in TAN, and I'll show you where I've come from and where I plan to go in the future. I opened my position in TAN on May 5th of 2021 with an opening buy at $77.76. I realized very quickly that I didn't have quite as much of an allocation in TAN as I wanted, so on the next day when TAN sold off just a little bit, I made a second buy at $74.03, which lowered my per share cost down to $77.14, a reduction of just 0.8%. And it didn't take very long for TAN to continue selling off, only a week in fact, and I made my third buy on May 13th at $68.75, which lowered my per share cost down to $75.94, a reduction of 1.56% from my last buy. And from here, I was pretty comfortable with my allocation size, so I decided it was time to let TAN go for a little while to develop some more price action so we could see which way the trend was headed. The solar sector actually saw a really nice bounce throughout 2021, so a few months later in August, when it decided to start selling off again, I added back into TAN on August 17th at $77.62. Since that price was higher than my per share cost going into it, it did end up raising my per share cost by a little over 0.25% to $76.15, but I thought it was worth the risk, and at that point I did wait quite a lot longer before I added to the position again. While the solar sector did see a nice recovery throughout 2021, it sold off with the rest of the market in 2022. And since a lot of the companies in the space are still losing money, they aren't making it quite yet, the market did not look favorably on this sector and it really got pounded. So I added again when it sold off from the 90s down below the 70s at $68.95 on January 6th of 2022. The buy lowered my per share cost 1.05% down to $75.35, where it is now, and my next price target is $58.85. Given how climate change has become a top priority for the world's governments, I do believe that renewable energies will see a lot of growth into the future. If you're an investor with a long-term time horizon like I am, I expect to have more than 20 years between now and when I can retire. This is a space that I do want exposure to because I think there's a lot of growth and potential for profits as we work through the coming years. That being said, any new sector can see a lot of volatility, and I don't think the solar energy sector is going to be exempt, so it could be an exciting couple of years before we really see it get its footing and take off. From here, watch my other videos, check out my website getirk.com, that is always 100% free, hit like and subscribe, and I'll see you in the next video.